Hey guys, it's Carlos Colon with Georgia Perimeter Homes here, and today we're going to be talking about first-time investing. If you're thinking about buying your first investment home. Welcome back, you guys. Let's jump right into it. Number one, know your goals. The way I do this set of it is I really start at the end and work backwards from it. That's the best recommendation I can give you. If you're really thinking about doing this on a large level, let's start with your end goal in mind. Fast forward 5 years or 10 years and go, what do I want to have? And then what do I want that to be doing for myself and my family? And then work backwards from there. If that's what I want in 10 years or 5 years, what do I need to do this year in order to accomplish that? That's the way you get started, and then we summarize your goals and start putting them down on paper. So the other things to think about when you're setting your goals: what area do I want to be investing in? Okay, what type of investing do I want to do? We also want to make sure that we talk about managing. If we're looking at multiple different areas, it's much harder to find one property management company that's going to cover a large area. Usually they stick to their particular counties and maybe the surrounding counties at best. So, if you're looking for multiple areas, make sure that you have a lot of different management companies that you'll be able to select from. Okay, next, what are my financial goals? Okay, so 5-10 years from now, what am I looking to do and what's going to get there, which will define what kind of margins I really want on my investment. And then that means, okay, for my first investment, that helps me understand that I need to look for something that's also going to meet that same criteria as far as how much do I buy it for versus how much is it bringing back on a monthly basis or a yearly basis. All right, and then the last thing is really going to be your portfolio makeup. And so when I fast forward 5 or 10 years, do I want a little bit of this and a little bit of that, or just focus on single family detached dwellings? Or some people have rental homes, like single family detached, multifamily, and they have commercial. So they have a balanced portfolio in all three. And so you have to define that for yourself. Is that something I want to do, or do I just want to focus on one thing and just master that one thing really well, which would be my recommendation. Number 2, read. Read a lot. This is going to be both financial books. This also applies towards audiobooks as well as podcasts. Make sure that you're doing research not just in one place but in multiple places. That way you have all of the information from several different point of views, and then you can summarize that to what you want it to do for you. Okay, so some of the books that I would recommend for you to start with, or at least make sure that you've at least read these once, if not twice. Rich Dad, Poor Dad is an amazing book. The Millionaire Real Estate Investor, that one's an amazing book. Flip by Rick Villani. That one's an amazing one. There's several others. If you want more recommendations, reach out to us and we can give you some more. Number 3, interview real estate investors. When I say interview, call them up, ask them to go to lunch, go, hey, I want to treat you, I want to pick your brain. Do you mind if I take you to lunch 30 minutes to an hour and ask you a couple questions about how you got started? Okay, a lot of times you'll be surprised. They're usually really nice people, and they don't mind sharing their information because they want others to succeed. And if they're not willing to do that for you, find somebody else. I promise you, there are people out there. So take them out, sit down, figure out how did they get started, and most importantly, make sure that you know what to ask them. Ask them about their mistakes. Learn from their mistakes so you don't make the same errors they did. Okay, that's the best way to learn, and that's one of the main reasons why reading and doing your research is going to be vital to your success. Number 4, study the area that you want to be in. Okay, which some of the things that you really want to know. Number 1, what are the trends in that area? So part of trends goes into what are the rent rates, both now and what were they a year ago? What about the year before that? So you can know what's trending. Is it going up? Is it moving down? Is it staying the same? So you can set realistic goals to that particular area for your own rentals. So study the rent rates and the patterns that have been happening for the last couple of years. Long story short, that's important to understand. That way you know how to prep that for your business. Along with that, study the taxes. Every county is going to have different taxes associated with them as far as property taxes are concerned. They change from year to year. Study what's happening in that particular area that you want to invest in, because when you buy that home, even if you buy it cash, you're going to have to pay for those taxes. And if the tax rate is really, really high, it's going to affect your margins. So make sure that you know what the taxes are going to be in that particular area and question whether that meets your goals when it comes to that margin that you want to make on your property. The last thing is going to be schools. This doesn't apply so much for rental homes, but the truth is it does and it doesn't. The rental home market is very thin to begin with in most places, especially in the state of Georgia. But the truth is if you have a home that's in a better school district or it's in a pretty good school district, if you ever decide to sell that home, it's going to be a lot easier to sell and it's going to sell for higher. So you want to know that on the front side rather than just blindly purchasing hoping that the numbers work, and if you ever need to sell the property in the future, you might be in some trouble, or the price point may not be what you expect it to be. Number 5, develop a win strategy for yourself, or a formula for a win purchase for you, or what you define as a win. The reason why this is important is because you don't want to deviate from this, okay? So there's a couple rules there. Number 1, develop the formula, and number 2, do not deviate. It's either a yes or a no, there's no in between. And so the importance in that is you have a formula where it comes to, I buy it at this price, I expect this kind of return on a monthly basis, and if I'm not getting that return, the answer is a no, period. That's it. It's that simple. And that'll make it very black and white for you. That way, if you get into this big time and you're sending out 2 to 3 offers on a daily basis, like some investors do, if not more, then at that point you can easily decide on, if they all say yes, you can narrow it down to who's actually worth taking on that yes for. So that boils down to renovations, and everything has to be in that formula. Develop a formula and stick to it. Okay? All right, you guys, that's it. Those are my 5 recommendations on how to become a first-time investor and what are the things that you need to take into account in order to make a lot of money and be smart about it. If you have any questions about this or need help buying or selling a home, our number is 770-314-1285, or check out our website at www.georgiaperimeterhomes.com. Bye.